Hi folks, welcome to the Bitcoin pricing model analysis for Brave New Coin. I'm your host Carl, lead trader and portfolio manager at Techme Capital. Quick disclaimer, this video does not constitute financial advice and is intended for educational purpose only. Well everyone, it's been a couple of weeks since my last updates. I've been quite busy, so apologies for not releasing new videos. But anyway, since then, not much has really happened on the mid to high time frames. On the lower time frame, that said, Bitcoin remains below its 200 weekly MA at 22.6K. Well, why not mention Ethereum, which has actually moved to 1,400, well above its 200 weekly MA, currently sitting at 1,230. So we'll look at the pricing models today, but keep in mind that this analysis will not cover the Bitcoin and Ethereum market updates, which actually I will release in the next 2-3 days, if not earlier, on this channel, Brave New Coin channel, and on mine as well. So stay tuned, everyone. Make sure you follow both channels and like this video. And let's get right to it. So before we jump on the Bitcoin pricing models, remember that those models do not account upon unprecedented global macros, since Bitcoin has not historically been, since its inception or creation, in a global recession or in stagflation. So keep that in mind, and let's have a look at the first pricing model, which is 200 weekly moving average. So this method, guys, let's go quickly over it. It uses a color heat map based on the percent increase of that 200 weekly moving average. And as you see, for the first time, well, not the first time, we did it maybe one time before, back on the crash of March 2020, we closed below the 200 weekly MA, which is now currently sitting at 19,270. No, apologies, the 200 weekly MA is at 22,351. And yeah, and currently we're roughly at, I think, 21,200. So we're kind of reclaiming there. We're trying to reclaim and try to break above the 200 weekly MA to get back to bullish, as we've seen historically happening. Once we recouped above it or we ride it as support, we were able to resume bullish or the bull trend again. Now, in this case, we don't know if that's going to happen. It's 50-50 really, but this does look like a good area to start dollars cost average in, which we overviewed before in the previous videos. So that said, I think we still have, if I take into account the global recession and all the macros, if you want to weight that in, there's probably is some kind of relief rally we could see here happening in the next few days or weeks, and then I still think we could see a last leg down to 12,000 or 9,000. Now, if you don't believe that, then most likely, if you follow all those models established in the past 10 years, and you still think that macros don't matter, recession doesn't matter, then most likely you're thinking this is the final bottom, and that's totally a valid point, guys. I don't want to exclude that, So then here we would likely go and start writing this as support. That's what we want to see for the next 2 to 4 months happening. The 200 weekly MA reclaimed as support and holding us as support. So let's see what happens. Just want to put it out there. This is what happens. This model has been holding quite well for the past 10 years. In 2015, 2018, Bitcoin bottom literally at the 200 weekly MA. Well, a little slightly under, but it still remains a good model for now. Let's see if it breaks. I don't know. Well, let's see if it holds up together. All right, let's move to the next model quite quickly. The 2-year MA multiplier. This model highlights periods where buying or selling Bitcoin would produce great opportunities. So let's see here. I'm just going to overview the bottom here. You see we're in the green area, which is a great buying opportunity. So we could be, yes, looking at the bottom, or we are in the capitulation zone here. So it's kind of a good area to buy at. Again, we don't know if we will see a little more downside. It's all possible. But this model looks quite good in 2019 and 2015. We literally were bottoming in the green area. So we are in that zone. We are in the capitulation zone. Again, I would say 2 to 4 months, be patient. If we hold up these levels and don't go lower, yeah, we'll definitely look to buy more. Let's go to the next one, Bitcoin rainbow price chart. It overlays, that chart pretty much overlays rainbow color bands on top of the log growth curve, and highlight kind of the market sentiment. Right now you see we're kind of in the blue, very close to the blue fire sale area. Yeah, it's a good area to buy at historically, and it has happened only when we were near the bottom. So this is kind of a good one, a good model. Again, I've seen this Bitcoin rainbow price chart laid over a little bit differently with on different site, and for some others who did this model, this model already broke for them and failed. So we'll see what happens. Again, if we go another leg down to 12,000 or a little lower, this model may fail like a few others that we're overviewing today. So we'll see what happens, but we are in the fire sale zone or capitulation zone. Unfortunately, this one has been down for quite a long time. I like this pricing model here, but I don't know what's happening. We'll have to skip that. Let's go to the 1 year hold wave. Look at the percentage. This one looks at the percentage of all Bitcoins that have not been moved from one wallet to another for at least a year. So quickly on this one, if you want to look at the bottom, remember last time I said it's not like an amazing model, but if you look at the 1 year hold here going up, people are holding more. In 2018, when we had a slight drop in that 1 year hold, orange line, that was the bottom, and Bitcoin had a big drop at that time. And before in 2015, I mean, you know, there was a little slowdown when we finally hit $200 at the bottom there. That kind of signified the bottom. It's not really a great model, guys, but here we can say, like I said last time, it still remains accurate. The 1 year hold here has dropped from 66% roughly to 65. It's a tiny little drop, but I don't know. I mean, that's kind of good enough, I guess, as a slowdown to call maybe a bottom here at 18 to 17 Ks. Now, we don't know with the macros if we're going to see another drop. Nobody knows really. Bitcoin has not tested those waters before, so let's see what happens. But it is calling that we are possibly in a capitulation zone, so we're at bottom, nearing a final bottom. So all right, let's go to the pi cycle top indicator, which is also can be used as a bottom indicator. This indicator or model is very effective at spotting the market cycle high or all-time high to within 3 days, and also the cycle lows or bottoms. In this case, let's look quickly at the bottom here. We noticed the last few times where Bitcoin was rejected in the previous bear market by that orange moving average. It finally made a big capitulation sell-off. That's what happened in 2018. And that's what happened in 2014. Now, in this case here, we were rejected several times since December. For the past 6 months, we dropped and we were rejected quite low, and we hit 19 or 17 Ks. So now we are in capitulation zone. We could be bottoming here, yes. That said, with the global macros and the timing, typically we bottom around November, December. It's questionable if we're there yet at the final bottom, 100%, or are we going to hold there until December or October, November, December? So we'll have to see. It's sometime. There's no need to rush in, but yeah, it's a good time here to buy some Bitcoin, that's for sure, and some other alts or Ethereum, especially if you sold like higher at like 50 Ks and above. Another good time to buy is when Bitcoin stays at the bottom here for quite a long time, goes in long accumulation and consolidation. Comes November, we go up and touch that orange moving average. that's been typically a good time to buy because the bottom is most likely in. We've seen this in March 2019, and when we broke up, after that we broke up much higher, and yeah, it took quite a long time in 2015 when we were at $200, but yeah, that stood pretty accurate. Once we hit that orange moving average, it was a good time to buy and accumulate. So we're not there yet, so let's be patient, guys, and let's move on to the next indicator, my least favorite one, fear and greed index. Yeah, all right, let's dive into it. So this one has been kind of not accurate lately, or at least for this cycle. It's been a little bit off, maybe 2-3 months off when it said, and sometimes it's been just inaccurate. But just to cover now the current action, I would say it's been in greed all the way down since, was that December 2021? It said that we're in extreme fear actually at 24.18. Many people were calling this the bottom, and I was calling it drop to 34, 32Ks, and all the way down it was still stuck at fear, and fear all the way down into January, January, February, and then it finally, we had a relief rally here and started to consolidate, distribute, and again we sold down. So many people thought that this was the bottom because fear and greed was flashing it for so long, and they were wrong. So this is not quite accurate, guys. You have to use this with TA. You have to use this with taking into account different other patterns, like a bear flag, which was one here, and look here, it was like super laggy here. We dropped to 25K, 28Ks, and many people here were still calling, many paramobiles were still calling moon and 100K by this year, end of this year. And I was calling for another leg down to 22Ks at least. And again, it was flashing fear, and it was off, and you can't use this, guys. You have to use different indicators with it. And you saw we had another flush down to 21, 22Ks, and we went under 200 weekly amount. We hit like 18, 17Ks. So right now it looks like a good time to buy. I would say in previous stop also holding us support from 2018 bull market, when we top on 19,600. So that's a previous stop here. That's a good time to buy, not at the previous areas that many others told you to buy at. So yeah, I think let's see what happens, but this model can't be used on its own. We could have a relief rally here. We'll talk about this in the next video that I'll release for Bitcoin and Ethereum. Yeah, but we still could have another leg down by end of this year. So let's see what happens. Let's move on. Funding rates. Let's look at the funding rates quick. Remember here, what I want to see, and I told you guys in the previous videos, I want to see capitulation screaming out of this chart. How do I see that? Well, funding rates being negative would tell me that we are in a capitulation zone. And remember, if funding rates is negative, the short positions pay for the longs. So longing would be super or very appealing to do, and we would short squeeze the shorts out of here. So yeah, so the further negative or the red we see here for the funding rates, like we've seen in May 2021, or the or the COVID crash back in March 2020, then that would indicate the bottom. But right now, if you look, guys, it's just green, flipping green here. It's not really showing that we've capitulated. So yeah, I want to see like a big wick to minus 0.02 or is it minus 0.03. I'm not seeing that. So yeah, we'll see what happens, but yeah, we get a relief bump and go back down. I still think we get another leg down, but let's see if in the next 2 to 4 months what happens. Right now here looks like more like sideways consolidation, some relief bump to maybe 22, 23Ks. It's possible that if SP500 goes higher, we can see maybe 26, 28Ks. Yeah, we'll have to see, guys. And then we get back down. Anyways, let's go to the SOPR, one of my favorite indicators. This indicator looks at the investors selling for a loss or profit. You remember last time I said it was not flashing anything showing like realized losses. Right now, it's starting to show that people are starting to feel the pain. We're starting to see like some downside happening here on this indicator. Still not on par as the previous bottoms in 2018 and 2014-15. So yeah, we're starting to see people holding, feeling the pain from holding from higher prices. Now remember, notice I'm saying starting to. So per this, we have not yet capitulated, but we're on the way to capitulation. We want to see like roughly zero, maybe SOPR hitting 0.90s. That would be a good start to say that, hey, like we want to wick somewhere around here, right, guys? That's what we want to see. So I'm not seeing that. We're very far from it, but we're starting to see that drop happening. So that's good news. I still think we should see another sell-off, a nice leg down, but to 12K or maybe a little bit higher. Maybe it doesn't have to go to 12 or 9K, but still think we're going to see a good capitulation because of the macros we're in. In time, we'll be able to tell. Still 2 to 4 months, so let's see what happens. All right, next are the mining models, where overview, as always, 2 models. One of them is the Puel multiple. This method, again, looks at the Bitcoin miners and how much revenue they are making now versus the last 12 months. It's a great tool to spot cycle tops. Should that model hit that red area here right at the top, or get close to it, close enough, or the bottoms, which is in the green area right below, which is right now where we're at. Now, this was established in the past 10 years. Again, Bitcoin has not been in global recession, has not been in stagflation, and such a crazy macro that we're in. So question is, how long can we stay in that green area, which signifies capitulation? With the current macros, or the macros don't matter. If they don't matter, then we're going to start seeing some bottom forming in the next 2 to 4 months. Or if we should stay here or move down deeper, then we'll most likely move a little deeper in here and wick to the bottom of it and stay a little longer in that green capitulation area. But we should give it some time. Let's wait a couple of months and see where we're at with this market. But we are in the capitulation zone. That's a takeaway of this indicator right now. And finally, the last model for today is the Bitcoin hash rate. If you remember, Bitcoin hash rate is the security measurement of the mining process as a whole. The greater the level of hashing power of the network, the more secure the network is. And we noticed, you remember, guys, last time we overviewed this indicator, I said whenever there's a huge hash rate drop, seen it with that orange line, which is a 700 daily moving average. If you notice in 2008, when we had that drop in the hashing power or hash rate, that signified the bottom. Now again, if you look here in March 2020, it was a huge drop as well, and then we recovered. Now there's sometimes other huge drops. It doesn't mean that Bitcoin has to drop with these, right? But we can call the bottom on when the hash rate has significant downside, temporarily at least. And then from here, you see now we're in a bear market here, and we start going down. Remember last time I said there was a huge drop in hash rate here, and it did actually spike down quite a lot since then. So yeah, sure, that could say that we are in a capitulation territory, near close or near the final bottom, which could be anywhere between now to the next 4 months, which should bring us to November or roughly 2022. So yeah, so let's see what happens, guys, but this looks promising. We are nearing accumulation zone. We have to see if we have more downside or this is it. Just let's give it some time. All right, that's about it, guys. I hope this quick update about the Bitcoin pricing model was helpful. Remember, you should look at my next video coming out for the Bitcoin market update, so you can get a good takeaway of all of what we reviewed today, and the market and the technical analysis that will be releasing, so you can make your own choices and your trade and get your strategy straight. And I'll be releasing also an Ethereum market update in the next couple of days as well. So make sure you subscribe to both channels, the Brave New Coin and my channel on YouTube, so you can get notified once they're released. Anyways, that's it, guys. Thank you for following. If you have any comments, anything valuable, I really would love to hear it. So please leave a comment under this video on YouTube, and also you feel free to tweet to me or send me a PM on Twitter or Discord. All right, take care, guys, and happy trading, and talk to you soon on the next video.